This will be the only video you ever need to trade FVG the right way. Okay, in this video I'm going to show you how to properly trade FVG. That is a fair value gap. Now, a lot of people trade the fair value gap the wrong way. Now, what I mean by the wrong way is simply not that they don't make profit or you won't make profit trading that way, but you'll be exposing yourself to too much risk, because the key to successful trading is risk management. You can be in a losing streak, okay, but you are still within your winning zone. Why? Because you have a proper risk management. Now, sometimes in our trading we experience a drawdown. Okay, this could be as a result of overconfidence. This could be as a result of just not doing proper analysis. But most cases, overconfidence, because by the time you start making money, you become overconfident. There's tendency of you feeling that, oh, you have understand all of this, and then that is where the trap comes. Now, if you have a poor risk management, that simple mistake can ruin you. And that's why I want to share this video with you, because I'll be showing you how I trade the FVG. Okay, I don't trade it the way others do. Now, an FVG, first of all, what is an FVG? They are simply gaps that have been created by 3 candles. You must have 3 candle formation. Okay, the first, the second, the third. This for a bearish FVG. Now, what makes it an FVG? You always look at the first candle. Always look at the first candle and the third. The first and the third. The second candle, in this case, is not needed for you to understand FVG. It's the first and the third candle. And what I'm looking for, their wicks. Okay, if their wicks do not touch, that means we have a fair value gap. This is a fair value gap. Okay, it's a form of imbalance. Okay, because in true price hypothesis, the market should be efficient all the time. Efficient pricing simply means buyers and sellers can easily buy and sell. Okay, they can easily buy and sell, get their orders filled. But in a situation where price moves sharply like this, trade drop, it moves sharply, some orders may not be filled. Okay, and that creates a fair value gap here. If this week and this week touches, maybe in this case I have something like this here, for example, then this is not the fair value gap. We don't have any fair value gap. Instead, what you have here is price efficiency. I'm going to do another video to show how to trade price efficiency. I'm going to make another video on how to trade price efficiency. And by the way, I have an announcement. Very soon I'll be launching my community, okay, where we have like-minded traders within the same community, trading together, giving my ideas, my weekly buyers, mostly my weekly buyers, my monthly buyers, my daily buyers, and how we can move in and execute that trade. Because the main thing is you have a trade idea and you have a trade execution. So when that is ready, I will let you know. So in the meantime, let's continue with the video. In this case here, we have a fair value gap. Now, this is how most people trade the fair value gap. They simply take a draw, identify that fair value gap, and they immediately make it their point of interest for trading. Meaning when price comes there, either it touches this and they'll put the stop loss above. They put stop loss above like this. Okay, and then the target probably lower and the rest. This is wrong. Don't do this. Don't do this. This is wrong. Let me use right here. This is wrong. Do not do that. Okay, do not do this. Why? Trading this way, you'll be putting too much risk on the table, even though it's 1%. The probability of this stop loss to be hit is higher. It's very high, because from my experience, I've seen price come up, tap into this, and then reverse it back. So you putting your stop loss above this just because you are looking for a tighter stop loss. Okay, you're looking for a tight stop loss, 2 pips, 5 pips, 10 pips, tight stop loss. Then you'll be, the winning percentage here of this trade is very low. It's very low. Now the reward will be big, so probably 30% you are still profitable. But why take so much risk? Why take so much losses? The way you can trade smart, because this is smart money. You can trade smart. And some people will say, okay, wait for price to come in here, look for confirmation. Most times you won't get those confirmations. These fair value gaps are being triggered mostly during news event, closes it, and then move sharply away from it. So you waiting for confirmation, you might not be involved in this trade. Okay, you won't be involved in this trade. Now, for the bullish fair value gap, also, you make sure that number 1 and number 3 candles do not touch each other. That means the wick do not touch. In so doing, you have created a fair value gap, and then you have something like this here. Okay, this region is the fair value gap, and as I said, most people will buy at the touch and stop loss below, which is very wrong. Do not do this. If you are following this channel, you have to, I'll do my best. I'm not saying you follow exactly what I'm saying, but go back test it and see if what I'm saying makes sense. Okay, price comes in here and they put the stop loss here. Wrong, no matter who is teaching you. Now it's better. Now the question is, okay, I will not to trade fair value gap. I do. I'll show you what I do. Okay, how I trade fair value gap. Now other trader will say, look for the 50%. Look for the 50%. Yeah. Okay. And also when price touch 50%, you buy. In this case, bullish, you buy, stop loss below. The main thing is not you waiting for 50% or 100%. The main thing is where your stop loss will be. That is the most important thing. When you see a trade setup, ask yourself, what is my trade? What will invalidate my trade? And the point of invalidation of this fair value gap will be here. Price coming, in this case, coming below this fair value gap. Now, if you are thinking of that as a point of invalidation, then this trade is a risky trade. Now, this is what I do. This is what I do. I use fair value gap, okay, as my confluence. Simple. This is what I use it for. I use it as what? Confluence. I don't take it as a trading area. I use it as what? Confluence. When I see a fair value gap, in this case for a bearish move, and I want to be bearish, maybe for some reason, I use this fair value gap as what? As a confluence. What I do is, in this case, I would rather put my point of interest at the hidden base. Yeah, hidden base. Okay, this is what I do. Let me take this out because this is the correct thing. This is what I do, and this will give you a higher win percentage. Okay, I identify the point of interest here, which is, in this case, it could be this hidden base 1 or this IPA. So when I see a fair value gap before the hidden base, that gives me what? Confluence. Okay, that price will come, because this fair value gap is liquidity. Fair value gap. because the fair value gap is liquidity. Okay, and if you know, I've been preaching that liquidity is what drives price. Okay, now especially during news releases or normal trading hours, you see price will return back, let's say for a pullback. Okay, this liquidity will be taken and tap into the demand of supply zone. In this case, the supply zone hidden base. Then from there, you can take the trade. If you are an aggressive trader, you can simply place your stop loss above here. It doesn't matter, even if it takes you out, because that's the price of being aggressive. But this point of invalidation is way stronger. Than the point of invalidation above the fair value gap. This has a more stronger outcome. Now, if you are less aggressive, you put your stop above the IPA candle. Okay, in this case, your risk will be lower compared to this, but whichever way, the key is to be profitable. The key is not for you to flip an account to a million, 10 million, and the rest. The key is to be profitable. Now, to flip account is a bad thing. No. When you can do that, fine, good. But the person I'm talking to right now is a beginner or someone that's struggling. So you don't need to have that idea of flipping account. Let me make 10% a day. Let me make 100% a day. No, don't do that, because you'll be putting too much load on yourself, and you don't need pressure. Pressure is what kills most traders. So what I do is identify my hidden base, and this serve as what? Confluence. The moment I see a fair value gap, I see confluence, and I wait for price, especially on the higher time frame. I wait for price to come close the fair value gap 100%. Okay, then from there I execute my trade. In this case, now you can start looking for confirmation. Good. When we go to 1 minute, you see those 2 pips, 3 pips, 5 pips stop loss. Okay, but I don't want to talk about that because it will be misleading. The logic is, when price comes in here, you sell, because you want to be following the order flow. Okay, all of this makes sense if the market is in a bearish order flow. All of this makes sense if the market is in a bullish order flow. So instead of you buying from the fair value gap here, you simply identify your point of interest, which is the hidden base here, or the IPA candle. The IPA candle is simply the candle that closes the fair value gap 100%. Then use your fair value gap as confluence. Price taps in, okay, you take your trade. Then your target, based on the setup, you know where to exit the market, and your stop loss: aggressive, conservative. Okay, conservative below the IPA, aggressive just below the hidden base, because this hidden base is a demand zone. In this case, it's demand zone that push price, and it makes sense for price to react from that zone. So trading shouldn't be complicated. Trading shouldn't be too much sophisticated. Trading should be simple, and that is my mantra. Okay, and I will keep making these videos look as simple as it needs to be, so that you can understand, even without you joining my mentorship, okay, or my community. So let me share with you an example I took on USD last week. Now, in this case here, this was the trade. I was monitoring this. If we go to the 4 hours here, we have a very strong bearish move, and you can see I've highlighted all these areas. These are areas where when price gets there, I'll be looking for what to sell. Now, like in this case, let me show you this before I even go to the main trade. Now, if you see this here, let me change this back to sorry. Now, look at this. But this is not the trade I want to share with you, even though this, I think I took this trade as well. But I didn't document it, so I won't share this. But what I'm explaining here is same. Now, even let us look at this here. Remember, you need to be following the trend. Now, drop base drop. What can you see here? We have this week and this week. They didn't touch, so we have a fair value gap. Now, for those that trade the fair value gap and stop loss above this, they are in profit. But if this was their target, okay, if this was their target, they will be it. In this case, they will get it. Okay. Now, it all depends on how you manage your trade. Now, let's assume price enter there and they make profit. Good. They are in this market, they earn their money and they are out. But what happens to those that tend to hold it for continuation? Price took them out here. Okay, price took them out here. Now, what I was saying is you wait for price to fill it 100%. Now, the moment price came in filling that, this is where you should be entering the trade. Okay, you enter the trade and market went lower, but before you know it went up. Now, the reason for this, if I'm to enter here, because the main leg, this is the main leg here, okay, and we're in a discount zone for a sell, so it makes sense to scalp. Even if you are trading with that same pattern what people are trading, you scalp. Now, this other point of interest was actually what I was looking at, because it's in a premium and it makes sense to sell, and this also was what I was also looking for, but quite unfortunately price didn't get there. Now, price came here. In this case, now look at the point I'm making. If you are to use this as your point of interest, this other one, your fair value gap, price touches there, put stop loss above. We see how price went through it. Price blast through it. Even if you are entering at 50%, because that level, that point of invalidation is very, very risky. A lot of times price will pass through it. This is the first touch, and what happened when came into this hidden base. This is a daily hidden base. Anyway, daily hidden base, because I trade this in a daily. If you go to daily, you see it, what I'm saying. You can see it's an hidden base. All of these are fair value gap. Okay, from here to here, these are daily fair value gap. And you can see price went through it without apology. Okay, so let's go back to the 4 hour. You can see in that case here, in that case, the point of invalidation will be above here. Okay, because this is a daily time frame, I'm more confident to put my stop loss above here than to put it above the IPA, because it will be too much pips here. And then you target this low, and you can see the time you got the low gets taken. But if you are trying to trade the way others trade the fair value gap, you will be out of this trade, and probably you might be afraid to come back in. So if you go to the 4 hour as well, you can see confluence close 100%. That is a trade. This could be one day, the following day you continue again up until that target gets taken. Okay, so now this particular trade I was talking about is this. We have this week. I did a video on magic of the week. Check the description, you see this week is my point of interest. Okay, if we go to the 1 hour, you can see we have this other block, like a demand zone. We have a supply zone here. Now with this supply zone, what I did is I looked for a fair value gap. In the 30 minutes we do not see fair value gap, but if you go to the 15 minutes, you can see fair value gap here, just from here to here, not 100% filled. So I was hoping for price to come in. Moment price get in there, that was my entry, and then this is the stop loss above. Okay, just above the eye here. I will put a screenshot here, somewhere here. You see the screenshot. Now that was the entry, and then market move lower. So just like this one, if you are to trade this fair value gap, just wait for 100% fill, then allow price to come in here, then you sell. Okay, but in this case it didn't work out, but instead what worked out was this. You can see this here, fair value gap here, 100% fill. If you put your stop loss above, you'll be hit. You can see price came in deep, moved lower. So what I use it for is simply confidence. I don't use it as a yardstick for me to trade. If I'm to trade, I'm not always confident with it. I trade it based on scalping, maybe take 20 pips out and then you wait for the real move. This is the real move. These are fake move, false move. You can see someone will say, oh, it's working, but you see this come down. So do not just take what I'm saying, back test. Whatever I do say on this channel is not financial advice. Back test it and see if it works. We have something here as well. You can see here, as I'm speaking now, this live market is moving. You can see that trade is something, but this here, because we are on the 15 minutes, this is simply a discount zone. You might expect it to go deeper in here, then you sell. But whatever it is, go back test it, and I'll see you in this video.